I wasn't a partner guy before. And then afterwards, I was like, I need some wisdom here because there's no way this is going to take me forever on my own. But I think because I was young and even in business, I didn't have partners. And looking back and, what I wish could have happened differently, I think I would have partnered with somebody had I continued in that business, partner with someone that could bring, be that extra person with me to make these decisions. And I'll certainly do that the next go around. I think there's so much value in having partnerships.
Welcome to the Real Freedom Show, where we inspire you to pursue your passion to gain time and financial freedom through opportunities in real estate. I'm your host, Mike Swenson. Let's get some real freedom together. Hello, everybody. Welcome to another episode of Real Freedom, Real Estate Leverage Freedom, where we highlight people building time and financial freedom through opportunities in real estate. I'm your host, Mike Swenson. If you want to get started on your real estate investing journey, check out our website, freedomthroughrealestate.com. Great spot for you to be able to learn, hear different people's stories, and really figure out their journey. I just want to highlight great stories to inspire people to pursue whatever passion that might be within real estate. And as we learn over time, things change. And even though you're in real estate, you might move over to something different, or life happens and you have to move over to something different. But there's a ton of cool stuff happening in the real estate space. And that's why we exist, is to highlight those awesome stories. So today we've got Ian Noble here. Ian is the founder of RunSteady Investments, has a background of owning a laundromat business for a long time, up to 14 locations, over 90 employees, and then transitioned to now being in real estate full-time in the Austin market as well as Colorado, work as a limited partner, general partner, really highlighting mobile home parks, self-storage facilities, debt funds, and other stuff. So you've got a ton of experience on the real estate side. So excited to hear about your journey. So Ian, thanks for coming on the show.
Yeah, thank you for having me. I'm excited to be here.
So just give us a little bit of a background, what you did prior to getting into real estate, and we'll go from there.
Well, I'm in Austin, Texas. I grew up here, and I got into a family business. It was a dry cleaning company.
Dry
And
cleaning. Sorry, I said
yeah, no, it's
laundromat, didn't
okay.
I? Yeah, dry cleaning. My bad.
There's a laundromat component to it, but we were more catered to like individual pieces and pressing the items. But yeah, long-standing family business. Got involved with that after going to college here, and eventually bought it from my dad. He was burnt out from the business and had removed himself. And so I spent my last 14 years of my life in the dry cleaning business, and owe a lot to it. I love all things small business. It got me into real estate very quickly. And so my happy place is kind of the overlap of where those two meet. So I would run my business, and then everything extra went into real estate. And I started about this 2014 was my first rental. Started buying single family rentals each year, trying to get something, another rental, and then eventually migrated into some triple net commercial leases, which I'm still an active investor in. I still do that as well as a personal investor. But yeah, I love all things real estate and small business.
Talk a little bit for people, that work W-2 jobs. The goal is to become an entrepreneur, start their own business. You've also got people who are maybe talking about buying or acquiring a business. I know just, listening to your backstory and hearing you on other, past episodes, that just because you have a small business and it's well established doesn't mean it's push the easy button and everything's simple and you
Yeah.
just get to sit there and be Mr. Passive and let everything run itself. So real quick, just would love to kind of hear some of those experiences being an entrepreneur and just the real life decision making, problem solving, things like that you have to handle, that it's not all just passive and simple as sometimes people make it out to be.
Yeah, it's funny. A lot of people throw that passive word around, especially with business and in real estate. But on the business side, I don't believe that there is a world where you can be a very successful passive owner. I think that for some of the really successful people you may see online, uh, maybe they have really large teams that they've set up. But if we're speaking specifically to you and you're in a W-2 and you're thinking, okay, I want to maybe get into business for myself, which I highly encourage, but you have to know if it's the right thing for you. You mentioned struggles, and a lot of the struggles obviously is staffing, sales, advertising. You name it. To whereas before, if you're coming from a W-2 role to where your job is X and you perform on that and then you go home, I'm not to say that that's easy either, but small business never stops, and so you have to really be ready to dive in, take the leap and invest in yourself, because at the end of the day, if you have a no fail mentality, you can do it, but you just need to know that unlike a W-2, everyone else's success and their family depends on you. If you have employees, you are their I don't want to say we're caretaker. You're the one that allows them to, take care of their family and support their dreams. So there's a lot more that goes into it than just, I want to buy this business. That being said, I highly encourage it. I think there's no better way to make a living, and a very good living. And I think a lot of people that get into real estate also have had some successes in the small business world, to where they can use funds from that to then transition and start building their little real estate empire.
So talk a little bit about getting into real estate. So you had mentioned, wanting to take funds and, buying single family properties. Why did you want to make that transition into real estate, or why did you want to get your feet wet into real estate to begin with? Kind of what was it going to accomplish for you? And then did you see at that time a path of like, oh yeah, I think I might do this more down the road, or did it just kind of evolve over time?
I was in my early 20s when I first started to get involved with it, and I'd seen my dad. So I grew up and had, the privilege of seeing his lifestyle, and I think a lot of it came from having real estate. And so he specifically was in commercial triple net properties, usually like single tenant operations, but I just saw that he didn't have to go to work that often, and I wanted that too. And I knew as you read these books, read Rich Dad Poor Dad, and you figure out, like everyone who wants to start. I advise, if you haven't read that book, go read it. Um, and I just got started, and the one day there wasn't honestly much thought to it. I always share this with people because sometimes it feels out of touch. But if you want to get involved and you want to do it yourself, like to learn the ropes, single family is a very good way to start. It's not going to cash flow much. Don't quit your day job, but it will help you, understand how the business works, and you don't have to overcomplicate things. I'm not kidding, to where the first couple of properties, it was no more, underwriting than on a napkin. Maybe, what's my mortgage? What will rent be in this neighborhood? Don't overthink it, and just get started, because when you get stuck, then you're stuck on the sidelines, and for every couple of years that go by, the window closes for you getting involved. And also it's you lost another couple of years of that tenant paying off your property. So do not overcomplicate stuff when you want to first get involved. Start with your local market, something you can drive by and touch, and I think that will help you get involved.
It's interesting because I hear, everybody talks about, oh, if I just owned this 5 years ago or 10 years ago. And it's
Yeah.
like, we always say that, the two best times to plant a tree, 20 years ago and today. And so if you're not started yet, find a way to get started. And then to your point, talking about starting with your local market and starting with what you know, because I think sometimes too, yeah, we try to overthink it and we try to be so sophisticated right out of the gate. But the reality is yeah, just find a way to get started and figure out what that looks like. For me, it was a property that I literally drove by on my way between work and home, was my first flip property, because I figured, oh, I can just load up the tools in the back of the car and, stop by
Yeah.
and do some work on the property, and kept it simple. And now that's changed. And that was, 15 years ago, but you're getting your feet wet and you're starting to flex that muscle. So when you bought your first property or two, you had mentioned really just kind of back of a napkin. Did you have an idea of, would it even positively cash flow? Were you thinking at all about buying it from more of an appreciation perspective, or even like a tax benefit? Was there a reason why, other than you knew your dad did it, or kind of what were you hoping to gain from just getting started very nonchalantly and not sophisticated?
Yeah, I'd say so. This is rewind to 2014. I had no idea about tax benefits. I wish I would have. And it was cash flow. I wasn't looking at it from an appreciation standpoint either. And I still do that today. I don't think that anybody should bank on appreciation. You don't know what will happen. So focus on cash flow from day one. I'd listened to a lot of Bigger Pockets podcasts way back in the day, and I remember the message over and over was like, if you can, cash flow $200, $300, go do it, and then go do it again.
Mm-hmm.
And so I never expected much, because it wasn't, it was what I was trying to build up, but my income came from work and from my business. And so that's why I say, like, there's a good opportunity to overlap, whether you have your own business or you have a W-2 job. Keep that and keep stacking up these properties if you want to take the active route. And then you can eventually build something, and again, you're not going to see this, you won't see the results of it for 10 years. Then when 10 years gets there, then you think, man, I've got these properties that the tenant has either paid off or is close to it, or they're working, I'm not putting into it anymore. Well, that's the goal at least. And so then you can really like step back and say, wow, this is the wealth component of what I have the cash and the income from my main thing, but now here's my wealth. This is my see you later. I'm going to step away someday ticket from what I've built up slowly over time.
So when you were finding those properties, were these things that were on market, off market? How did you kind of decide what was a good deal at the time?
MLS, they
Yeah.
were on market. I think I signed up with a realtor saying, hey, I'm looking for this particular price point. I knew the areas already at the time. So again, I mentioned in the beginning, I live in Austin. Austin's market really skyrocketed from COVID. But when I started, with these properties, it was a lot different back in the day. So the rules that may have applied back then, certainly you may not be able to obtain those sorts of deals now. But again, you got to get started and don't overcomplicate it. There's all these, I see things online like, how you can wholesale houses, whether you want it, you can flip houses, you can be a long-term rent, you can do short-term. There's so many options to make money in the industry and to get involved. You just have to pick what fits your lifestyle. Like Mike, you mentioned flipping, right? Like flipping probably has if done right, the highest profit margin. You can take away the most from that. But I don't know. Do you still flip?
Mm-mm. Nope.
You probably got tired, right? Like it's a lot. There's a lot of stress that comes along with it. So yeah, to answer your question, MLS was my ticket in.
Well, and where I'm kind of going with that too is how did you get your start? It was not super sophisticated with something on market that didn't really cash flow much, and you didn't really have a big plan or future of what you want to be. Because I think a lot of times people feel like they've got to map out this 10-year plan and, I'm going to do this and it's going to grow. And no, I think it's just get started, right? It doesn't have to be, I just know that I need to do this or want to do this, and we'll figure out what the next step is. But I've just got to figure out a way to get started. And that's kind of your story, right? It's not like you spent a lot of time going super in depth. I just know I need to get a property and I find it on the MLS. And I'm still a big advocate here in Minnesota. Like there's good deals to be had on the MLS because, I feel like you've got people that have said, I want to sell. You have motivated sellers, and there's less digging you have to do with off-market properties. We've been through off-market properties and they're like, oh, we don't want the tenants to know we're trying to sell. And so if you look at it, you have to pretend you're doing an insurance inspection or things like that. Or
I've done that before.
yeah, and then you like find red flags and the owner doesn't really have the information. And so there's just a lot of, it's different too. So I want people to know, like, you don't have to go at it with this super intense plan. It's just go get started, figure out a way to get started, or partner up with somebody else if you can't do it yourself. But it doesn't have to be sophisticated. And then obviously over time, what you've done has grown more sophisticated, but it didn't start that way.
No, not at all. And especially now is a good time. There's a lot of inventory out there. And if you're a buyer, it's a good opportunity. If you want to, we're talking about single family specifically, go for it. People stand behind, the excuse of high interest rates, but it won't last forever. Act like it will, when you're doing your math and you're, pretend that it's going to stay this way so that you don't, overthink or overestimate what you might earn from that property. But yeah, get started. Nothing's holding you back, and it's easier than you think to get involved.
And I know somebody listening to this too is going to be like, well, he's in Austin. Austin is unique. It's a different market. My market's not like that, right? So eliminate that thinking right away, right? You can find ways that are going to work in any market. Just because somebody happened to be in Austin, yes, they may have had some success, but you can find success in any market or a nearby market, right?
Being in Austin now, and you're right, like there was an advantage for how it grew, but I don't like Austin as an investor right now. It's so hard to cash flow, a lot of cash flow negative properties. So I actually don't look. I don't seek out single family homes anymore, but I also don't actively look in Austin like I used to.
Because you've learned, right? You've learned and got more sophisticated as you went. Are you looking to get started or scale in real estate investing but don't know your next step? Are you overwhelmed thinking about finding deals, analyzing deals, doing due diligence, and managing properties on top of it? Go ahead and push the easy button and invest with us. Real estate investing is what we do full time. We've done dozens of deals with hundreds of doors. We have the knowledge and experience to handpick the best deals that most investors can't find. We've got large off-market deals all the time where you can hopefully find returns and economies of scale that you just can't find on your own. The best thing is it's 100% passive to you for less capital than you put down trying to acquire a property on your own. Don't let this year go by where you don't make the leap, add to your portfolio, or you just sit in analysis by paralysis. To find out more, visit freedomthroughrealestate.com and click on invest. You can book a call and learn more there. So get to scaling your portfolio now with us by your side. So let's kind of talk about that next phase. So talk about your transition from having your dry cleaning business, your decision to decide to sell and maybe get into real estate more focused. How did that play out for you?
So if you're in business, you can relate that it's emotionally taxing. And I wasn't an expert on like delegating time and, working on the business. I was working in the business, very much an employee of the business is how, what my day to day looked like. And so what led me to get from, just running the business and just trying to buy property here and there to where I'm at today is, I figured out number one, I think I'm ready to hang up my hat with that particular business. And it just so happened I got an email one day, a cold outreach that we want to buy your business. And so that kind of prompted the whole, okay, I'm going to have conversations with that guy. Then I'm going to go get a broker and I try to figure out what's my business worth. I never sold a business before. Um, and I also got the business was offered on pretty quickly. And then I thought, I don't want to jump to this because what if I'm selling myself short? It could be a good deal. And then if so, yeah, take it. But you could also be leaving money on the table. And that's what you've worked for. That's why a lot of people are in business. And so, um, long story short, after many conversations, I was able to work a deal with the original guy that had reached out. Amazing buyer. I couldn't have asked for a better transition. Like all of our key staff, it's now been 2 years, and literally every key player is still there with him. So that's a testament of how it was passed along. And afterwards, when I sold the business, that was my first step from thinking, okay, I need to figure out what am I going to do now? I wanted to go buy another business, honestly. Like I was ready to go. And then I had to take a step back and be like, look, I couldn't focus on my family. I had the time. Yeah, I was able to say I'm going to go be with my kids all the time, but I didn't because work, my company pulled me in, or, I was very much engulfed in the day to day. So real estate was kind of the answer. And I figured out like, okay, I sold the business and I needed to figure out where am I going to place this money and what should I do next? And real estate was that answer, but not the way I was doing it before. The approach that I took this time was on the passive route. And for those of you listening that aren't quite sure about that, it's when somebody else runs the day to day. Then you're just putting in your money and you're trusting, and it is very much a trust, it's a trust play. You are trusting somebody to run a property efficiently and act in your best interest. And as a result, you don't get to make the day-to-day decisions, but you get to benefit from like tax benefits, the depreciation, cash flow, and whatever is to come from the upside later on that property. So that's how it all got started. There was someone in the industry that I had trusted and just known, followed for a while. They had a online presence, and that was my very first investment as a passive investor. And then I kind of fell in love with it. I was
Hmm.
looking at it like, do I want to keep acquiring property myself each year and running it, or do I want to focus my efforts here? And so since then, it's been on more of larger projects, larger teams, because I know that like there are many things that I was not good at as a or not the best at if I was doing it actively in myself. Number one, it's hard to acquire and build up your portfolio. It's difficult with money to get one asset at a time. So this allows you to partner up. That was another thing that changed in my strategy, Mike, was I wasn't a partner guy before. And then afterwards I was like, I need some wisdom here because there's no way this is going to take me forever on my own. But I think because I was young, and even in business, I didn't have partners, and looking back and what I wish could have happened differently. I think I would have partnered with somebody had I continued in that business, partner with someone that could bring, be that extra person with me to make these decisions, and I'll certainly do that the next go around. I think there's so much value in having partnerships. So that's what I look for now, just great people to invest with. And then eventually, we can talk about that later, but I transitioned into the business side of that because I liked it so much. And I realized there's a huge gap between business owners that, don't know what to do with all this excess cash that they may have from a successful business. And so that was kind of the transition for me getting involved in my business and what I do today.
It's interesting you mentioned about getting out of your own way because you talked about flipping earlier. That's why I stopped with flipping is, we had done a flip just a little bit post COVID and I did construction in college, so I have enough skills to be dangerous.
Yeah.
And at the same time, I was still working as an agent. And so I remember post COVID, like there was issues with supply chain and workers and that kind of stuff. So it was, hey, we're doing this flip. We need somebody to do this. And it's like, well, I can do it because I know how to do it. And I think I can do it quicker myself. And what it ended up doing is just sucking me out of my real estate agent job into working on a flip. And as surprises came up and things came up, our potential proceeds kept going down and down. And the end of the day, the kicker for us was the week we were going live, the furnace went out. And so we had to buy a new furnace. And that basically sucked up all the last remaining profit in the project. And I had spent months away from my family. The property was just a few minutes away. So like when I'd, work on a Sunday, they'd pop by for lunch and say hi to me. And then I look up and it's like, I'm doing this for my family. And instead I sacrificed my family and I had nothing to show for it. And so that's how I got into multifamily is I said, I've got to do something where I can't get sucked into it because I love doing the work. I feel like I could do it, but I've got to get out of my own way. And so now going to a multifamily apartment in a city further away from where I live, I literally can't go put on my tool belt and start working on, renovating the property. And so it was that piece of I had to put myself in a place to get out of my own way.
I'm
You get
so
it.
happy that you saw that. And you also mentioned the family component of it because, you know, there are two ways to look at this. A lot of people say, well, my wife sometimes she'll point this out. She'll say, hey, you've said before that you do it for the family, but you do it for you also. And she's right. Like there's a pride component to being able to build and play, play the game, whether you're an entrepreneur or in real estate. And it's always knowing that, you are continuing to advance. But yeah, byproduct of like what style investing or what work you choose is time and sacrifice with your family. So, to your point, that was the aha moment when I was getting out of the business. I didn't know how absent I was. Even though I was like physically there, I wasn't mentally there with my family. And that's been the biggest, change in my life since. And, to your point, like if you invest in properties that aren't in your city, you're not running by there and you're running it more like a business and less like a project because you can't go fix a leaky toilet in Chattanooga, Tennessee when you don't live there, right? So
Mhm.
that's the benefit of it. So I'm glad you brought that up though.
So talk about on the limited partner side. So you had mentioned you found people that you knew and trusted in terms of kind of placing your funds with them. For those people that might be interested in being a limited partner, maybe talk through that process of vetting out or even like learning about what opportunities are out there. You've spent more time on the mobile home park side and debt funds and things like that. But talk about choosing what asset class and kind of what opportunities you might pursue and kind of educating yourself and networking to make that happen.
Yeah, so if you want to get started as an LP, basically those are limited partners. You're the passive person putting in money to a deal, and the best way to get started, number one, is get yourself comfortable with what you're investing into, and identify with like you may not know what asset class you want to get involved with because there is a lot. There's land, self-storage, multifamily apartments, mobile home parks, whatever it may be. Figure out where your risk tolerance is. For example, like land development generally has higher risk, higher reward. You may make more at the end of that, but you're not going to have any cash flow for a while until that development sells. It may not sell as it should, or on the flip side, you can have something that's very low risk that's going to cash flow day one. That's more of what you consider stable. So find out what you are, what aligns with your risk tolerance. And then to your point, you have to really dive in. It was the most difficult thing for me was I mentioned trust earlier, was trusting. So I was used to doing everything myself. And you can't trust anybody more than you can trust yourself. And so you have to be able to figure out like, am I that person? Am I a good fit for that style of investment? Because if you're, knocking down someone's door, asking them how they're running it and constantly, it's not good enough. It's not the way I would do it. You're probably not a good passive investor. Like do it yourself and be good at it, right? Like there's no problem with that. You need to ask the right questions though, and that's the hardest thing. And still, for people today, especially with like new partnerships, that can be the most challenging thing is like figuring out who you're going to work with. Because like you've seen it in multifamily, they are there are so many deals. There's so many properties out there, and like you'll look at it and you'll get this investment deck that shows all the returns and the pro formas, and a lot of it all starts to blend together. And you really have to look at who is that individual that's running it. Are they going to step up to bat when something goes wrong? Do I trust this? Do I like them? I think you should like the people that you invest with too. Like just because if you ever have a meeting with someone and they intimidate you or you think like, man, that's a high caliber guy. Like he must know what he's doing. You maybe should align yourself with somebody, who you think, no, I can partner with that person, even though you're not doing the day to day, because you want to be able to pick up the phone and know that if something goes wrong, because in real estate, something will go wrong eventually, especially as people like have high aspirations. And you have to know, like, is that person going to be there to pick up the phone and, take a, you know, take an earful from, whoever's calling them. And so, yeah, I try to read, I read a lot. I looked at, try to look at track records of people, try to ask them about their failures, make sure they tell you failures. I failed as an LP. I lost money before I got into the business. I met with somebody in person and I thought, okay, this is going to be great. And it, just you never know that you can never judge someone's character. And I lost. It's not official, but I will lose my entire investment. And these are like the painful lessons that as you're investing, that I never factor in that risk. You look at all these underwriting models and then you think, okay, how is this going to work? And is this safe? But, at the end of the day, real estate is a people business as well. And so long story short, make sure you're very comfortable with that person and that you feel like this is a good steward of my money. And, you know, don't invest until you're fully comfortable. Don't get pressured into investing with someone that you're like, I don't know about that guy, but it seems like a cool opportunity. Like that is your gut telling you to not do it, and you shouldn't.
So talk a little bit about RunSteady Investments and what you're doing today.
Yeah. So as I transitioned, I learned a lot as a passive investor. I found out that like this is a business that I want to build beyond just investing in stuff. I want to help others because I wish somebody would have come to me 10 years ago and saying, you can do it a different way. You don't have to try to buy a property a year and add it to your plate. Your plate's already full. And so when I started RunSteady, it was I try to build a business for me and for what I wanted as an investor. So I talked about risk tolerance earlier. I'm a low risk guy. I was fortunate to be able to sell my company and I didn't want to go gamble it away with something that I felt was high risk. So right now, I essentially built a network of exclusive real estate deals where people can co-invest with me. I put all my own money into every deal, and we find and I'll say leverage or use the experience of the day-to-day operators that are actually running the property management, dealing with tenants, to where we are not doing it, they are. And so I will pre-vet these individuals. We talk about partnerships and trust. Um, I'll invest my own money with them first, make sure they're communicating properly, and then if it comes to a point to where like this is a good deal that I want to bring others in on, then there's the business component of that is I'll go out to the property, walk the property, poke holes in their underwriting, making sure are they being aggressive, did they miss something? When you see somebody that's gonna jump revenue by 20% but drop expenses by 30%, like maybe not, they might not be able to do that. And so my job is basically an extra layer of security. But when I said I built it for me, it's like before anybody else can get involved, like I have to be the one to do it. And I have to be ready and comfortable making that investment because I'm the first investor in all those deals. So I think that there's an association of like, okay, if I'm willing to put up money and, tell my wife and to make this a good move for my family, I'm not going to bring it to anybody else until I genuinely believe that's all set up. And I background check the people that I'm working with. You do everything that you can to make sure that this is going to be a solid investment for people. And then number one rule, don't lose money. That's a Warren Buffett's rule. And it's like everybody, that should be what you're looking for first. Okay, I'm promised this return, but let's talk about preservation of capital. How can I lose? And that's what you really want to focus on. You want that downside protection to figure out how will this be protected if something goes wrong? Will I just not get the returns, or is it all going away? If it all goes away, walk away from that deal and don't get involved. But that's kind of the style that I take every approach. And so I have an email list. People can get on the list, and then we announce our deals that way.
I remember early on when I was working on multifamily, one of the guys said to me, yeah, there's kind of three phases of investing like that. It's phase number one, or kind of step number one. You're not going to take my money and I'm not going to get nothing back. Step two is really like, I'm going to give you money and I'm going to at least get that amount back. And then step three is you're actually going to help me make money with the money that I give you. So yeah, there's a few pieces to that.
You want them taking you to step three for sure.
Right. Right.
Yeah.
At minimum, step two.
That's
but
right.
yes, absolutely step three.
And I'll add one thing that I forgot to mention. It was the tax benefit was something that really drew me in too. When I sold the business, we were fortunate enough to be real estate professionals. My wife was no longer working after we had our second kid, and she runs our Airbnbs. And so that year, that was another part of my journey getting pretty heavily involved with this was trying to offset some of the taxes from the sale that year and from my income. That was a unique year, but even now that's my goal moving forward because of having real estate professional status. It's like, how can I zero out my income by making investments and growing wealth at the same time? So that's what I like helping business owners try to figure out. Not all of them can apply. They can't write it off against, their ordinary income because they have to have real estate professional status, but there's still some amazing tax benefits to it along the way. So I like just, educating people, letting them know that there are other ways besides, paying the highest tax bracket every year, because nobody likes giving it back to the government.
Yeah. And as I find, the wealthier people, that's really more of what they're focused on, is wanting to find those opportunities to do that. They're less focused about the cash flow because they have cash flow coming in from businesses or whatever else it is. And so really finding ways to park capital into real estate and, take care of some of those benefits on the tax side as much as possible, it gets to be a high priority for them.
Yeah, you're exactly right. It's like a whole new class of its own. It like doesn't matter. Like we talk about multifamily or, commercial buildings, whatever it is. Like, no, some people, to your point, just focus on where's my tax preservation? How am I going to keep this in my family so we can keep growing it? Yeah. Good point.
Yeah. Cool. Well, for people that want to reach out to you and learn more about what you're doing, how can they do so?
Yeah, so for this show, and we'll include it in the show notes, have a free gift that's basically like a passive investor cheat sheet. If anyone's interested in figuring out what it looks like when you're first transitioning or first looking at a new partner, when you want to be a passive investor. So that will be in the show notes, and you can download that little PDF. In addition to that, my website's RunSteadyInvestments.com. I'm pretty active on LinkedIn. You can find me there at Ian Noble 1. That's the best way to find me, and I'm always available. We're not a big company. I like people to be able to reach me on my cell. So these are all ways, once you're in our network, that we have access to talking to you and just figuring out how we can help you.
Well, thank you so much for coming on the show and sharing. Exciting to see kind of what you've done and where your journey's taken, and cool to hear where it's going to continue to go. So best of luck to you guys as you guys continue to grow and pursue your real estate passion.